What if you could start investing without needing to be an expert? Imagine having a simple, effective strategy for growing your money over time. If the thought of navigating the world of investments feels intimidating, you're not alone. But here's the good news. With the right tools and mindset, investing can be straightforward and rewarding. In this video, we'll explore the top 5 investment ideas that are perfect for beginners, whether you want to start small or build a diverse portfolio. These strategies are designed to help you grow your wealth steadily and securely. So let's dive in and discover how to make your money work for you. 1. Broad market index funds, or ETFs. When it comes to investing, simplicity is key, and broad market index funds, or ETFs, are one of the easiest ways to get started. These funds let you invest in a wide range of companies, providing you with instant diversification instead of picking individual stocks, which can be risky and time-consuming. You invest in a group of companies that represent the entire market, like the S&P 500. This makes a solid foundation for anyone just starting out, offering the chance for steady, long-term growth without the complexity. One of the key advantages of investing in broad market index funds, or ETFs, is their low cost. Unlike actively managed funds that charge high fees, index funds and ETFs typically have much lower expense ratios, making them more affordable in the long run. These funds also help minimize risk by spreading your investments across various industries and sectors, meaning that even if one sector performs poorly, your overall investment won't be hit as hard. In addition, because index funds and ETFs are designed to track the overall market, they tend to perform well over time, benefiting from long-term market growth. You don't need to be a stock market expert to benefit from these investments. Simply pick a broad market index fund or ETF and let it work for you. This hands-off approach is perfect for beginners who want a simple and reliable way to start investing. 2. High-yield savings accounts, HYSA. If you're looking for a safe place to park your money while earning more than you would in a traditional savings account, high-yield savings accounts, HYSA, are an excellent option. These accounts offer a significantly higher interest rate compared to regular savings accounts, allowing your money to grow over time without taking on risk. As interest rates continue to rise, many online banks offer HYSAs with competitive annual percentage yields, APY, that make it a smart choice for beginners looking to grow their savings. One of the best aspects of HYSAs is the liquidity they offer. Your money is still easily accessible, but it's working for you by earning interest. This makes HYSAs a great place to store emergency funds or set aside money for short-term goals while earning a higher return than a regular savings account. Plus, your funds are FDIC insured, meaning that they're protected by the federal government, giving you peace of mind. Opening an HYSA is simple and can be done through most online banks with minimal requirements. The higher interest rates, along with the ability to access your funds when needed, make HYSAs a fantastic starting point for anyone who wants to save money while watching it grow at a faster rate. With no risks and easy access, it's an ideal solution for beginners who want to begin saving with confidence. 3. Robo-advisors. If you're not sure where to start when it comes to building an investment portfolio, robo-advisors are the answer. These automated platforms use algorithms to create and manage a diversified portfolio tailored to your financial goals and risk tolerance. Robo-advisors make investing simple by taking care of all the complex tasks, such as asset allocation and rebalancing, without you having to lift a finger. The best part about robo-advisors is their hands-off nature. You answer a few questions about your financial goals, and the robo-advisor takes it from there, managing your investments automatically. Popular robo-advisors like Wealthfront, Betterment, and Fidelity Go are perfect for beginners because they require little to no prior investment knowledge. They even handle rebalancing, so you don't have to worry about making adjustments as the market fluctuates. Robo-advisors typically charge low management fees, making them affordable for anyone who wants to invest without paying high costs. They also offer great options for retirement accounts. So, if you're thinking long-term, you can set up a tax-advantage account that grows over time. By using a robo-advisor, you're effectively putting your financial future on autopilot, making investing simple and accessible for beginners with no prior experience. 4. Fractional shares. What if you could invest in big-name companies like Amazon or Tesla without needing thousands of dollars? If you're just starting out in the investing world, the price of high-demand stocks can seem overwhelming. But with fractional shares, this is no longer an issue. Fractional shares let you buy a portion of a share rather than the whole thing, making expensive stocks accessible to everyone, even those with a smaller budget. For instance, instead of needing $1,000 to purchase one full share, you can invest as little as $10 in a fractional share. The real beauty of fractional shares is that they provide a chance to invest in some of the world's most valuable companies, even if you can't afford an entire share. This opens up many possibilities for you to diversify your portfolio, making it easier to spread your investments across various industries and asset types. With fractional shares, you don't have to focus on one single stock. You can start building a well-rounded portfolio with just small amounts of money. Furthermore, fractional shares allow you to use a strategy called dollar-cost averaging. This means you can invest a set amount of money regularly, which helps to avoid trying to time the market. By investing in fractional shares, you're essentially getting exposure to large-cap stocks without having to commit to the full price. Many well-known brokers like Charles Schwab and Fidelity make this process simple, offering fractional shares with easy-to-use platforms for beginners. With fractional shares, you can start growing your wealth little by little, making it easier to enter the market and learn about investing over time. It's a low-risk, high-reward strategy to get started in the stock market, especially when you're working with a limited budget. 5. Target date funds. Are you looking for an effortless way to invest that adjusts as you move closer to your financial goals? Target date funds may be the perfect solution for you. These funds are designed with the principle of time in mind, automatically adjusting their asset allocation as your target retirement date approaches. Essentially, they start off with a more aggressive investment mix, focus on stocks for higher returns, and then gradually shift to a more conservative approach as you near your target date. This set-it-and-forget-it strategy is perfect for those who prefer a hands-off approach to investing, but still want their money to work for them. One of the best aspects of target date funds is that they are widely available, especially through employer-sponsored retirement plans like 401ks. You can also find them through IRAs or individual investment accounts. This makes it easy to start investing for your future without having to actively manage your portfolio. These funds are built with built-in diversification, which helps to reduce risk. You're not just investing in one asset class or one stock, but instead, your money is spread across a wide range of investments like stocks, bonds, and other assets. Target date funds take the guesswork out of investing by automatically adjusting the fund's mix to ensure that your wealth is preserved as you approach your target retirement date. This makes them a perfect fit for beginners or anyone who doesn't want to spend a lot of time researching individual investments. Simply select a fund that aligns with your retirement date and let the fund do the rest. Whether you're just starting to save for retirement or already well into your journey, target date funds offer an easy and stress-free way to build wealth over time. There you have it, 5 simple yet effective investment ideas for beginners who want to start building their wealth with confidence. Whether you're looking for diversification through ETFs, hands-off investing with robo-advisors, or affordable entry through fractional shares, these options offer something for everyone. Remember, the key to success in investing is consistency, and starting with any of these strategies will set you on the path to long-term financial growth. If you enjoyed this video, don't forget to hit the like button, share it with your friends, and subscribe for more financial tips to help you on your journey to wealth. Thanks for watching. I shall see you in the next video.